The doom loop has been initiated. Will the markets put it to a stop, or is this a big sell-off? All that and more on Sunday Night Charts. We take a look at charts to help you win the trading week ahead. I'm your host, Steven Van Metre, and thanks for joining me on this Sunday. As the futures open, the moving average 21 days red, 50 days green, 100 days blue, 200 days tan. These are the colors on your screen. Price versus momentum. Price is a general direction is headed. Momentum is a rate of change, a bullish indicator for both is positive and a bearish indicator for both is negative. Momentum often, but not always, leads price, but in today's show, it looks like it does. Technical analysis attempts to determine where buyers and sellers are at. Resistance is the level buyers can't break, and support is the level sellers can't break. Or resistance is where the sellers are at, and support is where the buyers are at. Technical analysis does not predict prices. It can be used to determine the risk of a trade, help with time and trade, and provide direction of the path of least resistance. Charting offers possibilities, not probabilities, and not certainties. And let's kick it off with the S&P 500, looking at the percentage of S&P 500 stocks above their 50-day moving average. Remember, we talked about how I thought this might get to a one standard deviation move, and it hasn't. Doesn't mean it can't try to push there, but notice how you're seeing the S&P rise against the percentage of stocks above the 50-day moving average falling. That is a bearish divergence, and usually when you start to see that, if assuming this continues, that tells you the broad market is headed lower. Let's look at the 200-day and see which percentage of stocks are above their 200-day moving average, and sure enough, what do we see? The same exact thing, bearish divergence, as the percentage of stocks above their 200-day moving average go down and the equity market goes up. It tells you there is risk off in the short term coming. Let's take a look at the screens. We've got price bullish across the board. Momentum still bearish, unchanged. Remember, watch momentum now. Momentum's telling you what those percentage of stocks above the 50-day moving average. We're telling you, let's take a look at the charts, because what do we see in the charts? Right as we identified properly a supply zone building, and at the moment, unless it breaks out to the upside, that supply zone is a sell zone. Now, normally it would be anyways. The only question is at what point do the sellers get exhausted? So far, we're not seeing selling exhaustion. Plenty of support below. Here's your sell zone. Here's your buy zone below. Now you know where they're at. Let's move on to the NASDAQ 100 and see a similar story here. Bearish divergence as the percentage of NASDAQ 100 stocks above their 50-day moving average starts to head lower as it breaks out of that supply zone. We'll take a look at that in a moment, but this telling you bad omen for that breakout. That means the breakout is concentrated in a small number of stocks. That is not good. Look at the percentage of NASDAQ 100 stocks above their 200-day moving average starting to roll over, head lower. Again, as a small number of stocks head higher, that's not good. Let's take a look at the screens. Price unchanged, momentum now flipping bearish on the 21-day. So even as price is rising, momentum is slowing. That's not a positive sign given the bearish divergence we see in the percentage of stocks above their moving averages. All clear above its moving averages. 1 month momentum now back to the positive. Let's take a look at the charts, and we should see that breakout above that supply zone that we drew in last week. And there it is. There weren't a lot of sellers here taking it higher. The only problem now is with a small number of stocks leading it higher, will that get rejected pretty quick? We'll see. That is the question. Otherwise, that can go higher. If it does, it's being led by a very, very small number of stocks. Again, that is dangerous as we look to the doom loop coming up later in today's show, which is, of course, as you remember from last week, when treasuries and bonds start to rally, watch out below. Let's take a look now at small caps. We usually focus on IWM, which we will, but we don't have that available through indexindicators.com. What we do have is the S&P 600, certainly a good enough proxy as we look at the percentage of S&P 600 stocks above their 50-day moving average. Again, bearish divergence. Notice how it's headed lower. And what's happening now? You're seeing a lag of the S&P 600. So that is a sign, again, that as the percentage of stocks go below their 50-day moving average, so too the index will follow. That's the risk off warning on the NASDAQ. And what do you see on the percentage of S&P 600 stocks above their 200-day moving average? That's moving lower. It's starting to guide the broad index lower as well. Again, saying that all of these moves are concentrated in a small number of stocks. Let's flip over to the Russell 2000, a little bit broader than just 600 stocks. Price bullish across the board. Momentum still bearish. Again, momentum being the signal here that we've seen now on the S&P 500, NASDAQ 100, and Russell 2000, now dropping below its 9 and 20 to 1 day moving average as an early signal potentially what's to come. Let's take a look at the IWM now and see what's going on in the charts. And wow, it hit that supply zone up there. And what did you see? Sellers. Now as price starts to head lower, it's coming right to the top of this buy zone. Let's zoom out so you can get a better picture of it. We'll go out to the 1-year chart, and here you can see all it's now doing is confirming the top of that prior buy, what is a buy zone. This is where the buyers need to step in. Ball's in the buyer's courts here to take this higher. If it gets rejected at this level, it will come down probably to around 227.66. If buyers can't hold that, then the 6-month volume profile line will get retested. So buyers really, really, really need to test and support the supply zone. And the question is, early next week, will they do it? We don't know. Let's go on. I mean, there's just not enough information to tell. Let's take a look at the transportation sector. IWT price still remains bullish, common theme, but look at momentum flipping all the way bearish across the 3 moving averages, now below its 9 and 21-day moving average. 6-month momentum flip positive. Let's take a look at the transportation sector, which, if I recall from last week, was almost at all-time highs. Let's go back here and zoom out to the 1-year, 2-year chart. And what do we see? Potential double top. We talked about how there would be sellers there. There are sellers there. And so what does that mean? Price is coming right back into a little bit of a supply zone here at 272. Found some buyers. So is this story over for IWT? Not exactly. Certainly there are buyers there. Could make another run at its all-time highs. The question is, how strong is this little supply zone here? There's heavy buyers down below giving support. Most likely move maybe to the supply zone below, testing around the 267, 268 level on IWT. All right, YT, not WT. I don't even know what that is. All right, how about the energy sector? Remember, energy sector is going to lead the broad market lower, as well as you were going to see interest rates, or the opposite, bond prices rising, yields falling, dollar rising. So we're seeing that again. We're going to see some of this doom loop scenario, but watching the energy sector kind of validates the broad equity market is going to head lower. The economy is slowing. Price on the 21-day flipping bearish as it turns downward. But the momentum on the 50-day moving average is starting to speed up. It's now below 9, 21, and 50-day moving average. To me, when it starts getting below the 21 and 50, that is a signal it's headed lower. Let's take a look at the energy sector. And let's flip first. Take a look at crude. Looks like it's breaking down. Came out of a little supply zone that we drew in there. You may remember that. Up in the 80s, we're now seeing sellers. There it is, below the 21-day in red, below the 50-day in green. Coming up on 100-day, which is a big supply zone. You can see it here. Strong support at 65. So, what happens here is I would expect crude prices to go lower into next week, probably somewhere into the 73 level before you start to see buyers come back into this. Now let's take a look at XLE and see what do we find here. Similar story. XLE is actually painting a better picture of where crude's going to go as it breaks down. I would likely to see XLE coming down into this $52 to $53 price range and looking to find support there to see if the buyers are still there. Plenty of support below that, but you'll notice this nice rounding top here getting rejected below the moving averages, realistically coming down to probably meet its 100-day moving average again in that $52 to $53 price range. We'll just say closer to 53. How about that? All right, let's go on to the financial sector. Bearish on the 21-day moving average. Remember, financials, big share buybacks from the banks help driving price below. Now the 50-day moving average as well. That is not a sign that you want to see if you're bullish, is when it breaks below the 50, the 21 and the 50. Those two keys to watch. And here is a beautiful picture of that supply zone overhead. We drew it in, gets rejected, comes down, and now it should tag this volume profile line sitting at looks like, we'll just say 38 because I can't see it that well. Should tag that at 38. So I looked for XLF to come down, hit the supply zone, hit the moving average, maybe a short-term bounce. If you're a short-term trader, you want to be watching that. If you're long-term, well, go look at the bonds when we get to that, because the doom loop could be coming. All right, let's see. How about the industrials? We see price bullish, momentum bearish. No surprise, it seems to be the running theme of today's show. Now below its 9-day moving average, not 59. Let's go and look at XLI real quick. And what do we see? It did briefly make new all-time highs. It's sitting right near its prior all-time highs, slightly below the 21-day moving average. Tons of support at 103.15. And it would tell me that you can easily come down there, tag the rising 150-day moving average, and wouldn't surprise me if you find buyers there. And that would be what you're looking for, across the moving average and a reconfirmation. Well, the moving averages are starting to rise, and this is coming, and you see price moving down. So it wouldn't surprise me if it gets in. First, find some buyers around this 104, see this little supply zone. But look how deep it is. How many buyers are at 103.05? It looks like is the right number. Don't be surprised if it comes down and tags that. Buyers want industrials, not to mention that they're going to be looking at that stimulus package, which is not necessarily bullish for stocks, but it doesn't. The sentiment of it is very bullish for it. How about the utility sector? Price and momentum unchanged, but wow, how about that now above the 50 or above the 9 and 21 day? I guess I'm substituting 9 for 50 in today's show. 3-month momentum negative and rising. Utilities getting some play here as they were looking to break down last week. Let's take a look and see. They came down, and it looks like this is creating a bullish flag. You see, here's your flagpole, and here's your flag hanging down, and this would be conducive for higher prices. Where does that mean? For the utility sector, it needs to break up and get into the $68 price range before, or high $68 price range before it sees resistance. Wouldn't surprise me as a risk-off sector. Initially, you see utilities rise. You got, again, this nice little bullish flag. You're supporting the moving averages. Other than the 50-day with trending lower, you got the 100-day curving up. It's trying to crawl up the 21-day, so it looks like bullish for utilities. Again, that's generally a potential risk-off signal, but I think the worst signals are to come. How about gold miners? Now going almost bullish across the board on price and momentum. Now just slightly below its 9-day moving average, not a big deal. 9-month momentum positive and rising. So that what that's saying is over the last 9 months, the price is higher than it was before and rising, and that is a good sign. Let's flip back over to GDX here on the charts and see what's going on. It broke through there. Now that, well, this is interesting because the 6-month volume profile level is now below, acting as support. Remember we talked about how I thought price would get up here into the $35 range, get rejected. Now, if you're bullish on this, it's not a big deal, because what's happening is you potentially have your left shoulder, your head, your right shoulder, an inverse head and shoulder. Your neckline is at this dotted line, which has not moved. It's at 33, will stay 50. Price is coming down to reconfirm it. If it holds there, and that would be bullish for gold mining stocks to go higher. So actually, if you're bullish on the mining stocks, you want to see it go down and hold that level at 33.50. If it holds that, there's your short-term play to the upside. How much you get from there, couldn't tell you, but you got some upside play if it holds that, based on the simple technical analysis of where the buyers and sellers are at. And you can see these were sellers before, and now they're turned into buyers. So that is very key. Let's go on to, of course, when we get to emerging markets, may have a different story, and here it is. Remember, if EEM's going down, gold is not going to keep going up, particularly the miners. Price now bearish across the board, below all the key moving average. 1 month, 6-month momentum negative and falling. Only 3-month momentum flip back to the positive. Not a good sign if you are risk on for gold miners. You really want this to go up. And what is happening here with EEM is it's stuck at its volume profile line. We move out to 1 year. We see below this is sellers, above this is buyers. It never made that higher move that I thought it might. Let's zoom into the 90-day. You can see sellers are above the current price. That is not good. You look at the 30-day, sellers are above current price. Not good. So sellers are dominating here. Even over the 10-day, sellers are above. So what does that likely tell you for price of EEM? It's likely to head lower, retest these little double bottoms here at 49, and see if the buyers are still there. If it continues to head lower, it is not a risk-on move for the miners at all. The two follow each other. If you don't believe me, give them a chart. How about high-yield bonds telling us risk off? Whoa, lots of red on high-yields. Price and momentum now bearish across the board. Still below all the key moving average. 1, 3, 6, and 9-month momentum, all negative and falling. and that is a bad sign for the equity market. Remember, when high yield bonds start to head lower, the whole market goes with it. And sure enough, we see the 6-month volume profile. Very clear where the sellers are at. We said this was not pretty last week. Zoom out. There it is, that 1 year. We now know whoever's been buying, there's been a whole heck of a lot of selling below that. Now, who is indeed selling? Companies are issuing lots and lots of high yield debt. The market is soaking it up, and looks like the market's getting tired of that. And companies continue to issue debt to buy their shares back. And you can see from a technical position, we move out to the 2 year. You see that volume profile stuck right there. What does it tell you? This thing is close to breaking down. What do we need it to see? Actually, if it breaks below its, let's see, it's got a little bit of support here at 86.52. It breaks that, you're likely to see a retest down here at 86. It doesn't hold 86. Well, that is a problem, because below 86, your next move is right down here into 84, and you start to get a big risk-off move as all that junk debt gets weighted down onto the market. Not to mention, as we move forward on bonds into, finally, the doom low Treasury bonds. You see Treasuries rising, dollar rising together. That is deflationary risk-off move, massive risk-off move. And we see price momentum unchanged, back above its 9 and 100-day moving averages. 9-month momentum positive, rising. 3-month momentum negative and falling. But the picture for TLT, as we know, Bond King loves duration, especially when risk-off moves comes. Here you see all it did was up. And what do we talk about? I said it was going to magnet up to the volume profile line, and sure enough, it did. Here you can, let's zoom out a little bit just so you can see what's going on. See this nice rising trend line, and then it had a shorter rising trend line right up to the 6-month 1-year volume profile line. It needs to break that, get up to 152, break through 152. Sky could be the limit as you get a massive risk-off move in TLT. Let's zoom in and look at the 90-day chart. So it's got a little higher to get up to the 90-day profile line. How about the 30-day? 30 days below, acting as support. So I remember I told you buyers would come in, and they did. So there's a 10-day. You can see it's pretty much sitting right there at the 10-day. So telling us that the direction for price on TLT is likely higher. Market does not want to see that. How about we move on to gold? Price bullish, momentum bullish. Below the 9-day, 6-month momentum negative and falling, 12-month momentum positive and rising. As gold is trying to break out. It wants to. Investors wanted to, but boy, emerging markets going. I mean, it's just following. I mean, TLT and gold are going to be linked until they're not. That's always been part of my broad thesis. When you understand that, when you see gold fall and TLT rise, they're telling you risk off in the market, but they will move together. So it's not real surprise that TLT is following gold higher. The question now becomes is if gold goes down, it's got a ton of support here at 1800. As we've talked about, you see it on the 1-year chart, and on the 6-month chart, you still got it at 1800. How about the 90-day chart? It's at 1800. How about the 30? You want to take a bet on that? Right below 1800. Now, 10 days not going to be there. There's no possible way. It's at 1865, so sellers are above. Price likely moving lower for gold. If gold starts falling, bonds start rising. That is telling you things, liquidity in the markets are getting bad. If it continues and starts to make major moves, there is a liquidity crisis coming. How about this? On the silver, we move here. Price momentum unchanged, now below its 9-day moving average. Nothing else changed. Remember, we were looking for silver to potentially go up. Let's see what happens, because I've not had a chance to follow silver this week. And it came up to its 200-day moving average, got rejected. It's got plenty of price support down here at 24. So even if it came down and tagged down to 24, now what you have is a supply zone that was a buy zone, flipped to a sell zone. Now you have this left shoulder head, right shoulder. The neckline is going to be right where it's at now. And even if it came down lower and held that support, it still would be okay. All right, let's continue to the last part of the doom loop. Is the dollar DXY price momentum bullish above all the moving averages. All the momentum screens are green, and we've known this was coming because we've looked at this many times. Again, you get bonds rising, dollar rising. That is risk off. Remember, all treasuries are future dollars. And remember, we said it was going to get up to this $96, $97 range. You got to zoom out on the chart. Go to the 2-year chart. Here you can see it's just sitting right below where it was back in June of 2020. So There you go. And should now then make a move up into 97. That is a supply zone where previous sellers were at. If it can flip that to buyers, and look at this beautiful bottom. Everyone told me before this was absolutely a continuation pattern. It was head lower, no chance of that. How did we know that? Well, it was really easy to tell. Go down to UUP, pick up that volume profile on 2-year chart. All you had was buyers under there, just buyers, 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 tons of them, telling you price on UUP going up to this 26.31 price level, and that is a risk off for the markets as the dollar and bonds look to move higher, initiating the doom loop. And with that, we'll see you back on Monday for the show. Thanks for joining me. I'm Steve Van Metre. Bye now. The content of this video is prized educational information only. Is not intended to provide investment or advice. This channel is not to be construed as a recommendation or solicitation by or selling a security, financial instrument, or participate in a particular trading strategy. This video was prepared by Steven Van Metre personal capacity. Opinions expressed in this video that I'm going to do not reflect the view of Atlas Financial Advice Inc. or Steven Van Metre Financial.